Okay, it says you are live, and good morning, everybody. And let's get this party started. Okay, if people are watching this on X or on Twitter or on YouTube, let me know. Say something in the chat. I'm also going to try answering questions from the chat, and if there's any comments or anything that you'd like for us to talk about, and where to tell me where you see the day going, we can talk about that too. Okay, so just as a quick recap of recharge headset, that's great. Hopefully, you guys can hear me until the headset. If not, I'll have to figure it out. Apparently, when I was out of town, the headset wasn't charging like I thought it was. Okay, so anyway, that said, I think we pretty much all know what happened on on Thursday. We had that sell-off combination. Well, actually, Wednesday we first started having the weakness on that. No, Wednesday was the CPI. Thursday we had some weakness on the government account deficit, and word started leaking out about the whole uh, Israel-Iran thing. Good morning. Then, of course, on Friday we had we had the start of the fighting, and we we bounced. We went down overnight, right above that 59.25 area, and we kind of chopped around in this zone and ended up closing at 59.75 ish. I'm not going to do a recap of all the features or whatever that were there. Just want to kind of bring us up to speed. Now, this is a busy week, as I said in my note, and I've been forecasting for weeks to come. And why is it a busy week? Let me pull up my notes so I can be, be sure to like not miss anything that's kind of sometimes obvious to me that I sometimes forget. Okay, so what do we have coming going up on this week? This week we have, aside from, okay, sorry about that. Take two. Okay, as I was saying, the mic didn't didn't charge over the weekend. I had it plugged in, so let me just make sure that I'm presenting what I want to present. Present, share screen, entire window. Okay. Move this out of the way. Share. There we are. Okay. So as I was saying, now you get to see my face. Hopefully you guys can hear me. Okay. Yeah. The boom mic, the battery somehow didn't charge. I'll figure it out later. Expect technological issues with me, folks. Just it is what it is. Okay. So as I was saying, this is a busy week. Aside from the bond auction and the regular stuff, from an options point of view, what we have is, and let me go here. No, let me go here. We have here we are. That's what I want to see. We have VIX expiration on Tuesday is the last trading day. And so Wednesday morning is the settlement. Wednesday is also the last trading day of the SPX AM expiration because Thursday, Juneteenth. And so we have a few crosswinds there. We also have the QYLD roll, which those of you that have been following me know that I talked about. And what the QYLD roll is QYLD is a ETF. Thank you. Is an ETF that that sells at the money covered calls on Q, basically. Actually, they have a special contract that they use. And then on the day before it expires, which is the AM expiry, they buy it back. And that buyback tends to create supportive flows because they're buying back a lot of delta. But of course, the flip side of that is on Friday, they then sell the at the money NDX call for the next AM expiration, and that has a suppressive effect. So we have all that going on top of which we have the conflict in the Middle East. And let's get to that real quick. I kind of talked about it in my note a little bit. And so what happened, obviously, or hopefully obviously, is we know that volatility spiked. We know we had Nations Index, now interesting, the tail index, roughly the 15 delta puts, that spiked. Whereas the one standard deviation out of the money stuff didn't spike as much. We had VVIX, the demand for hedging went from below 90, wherever it was, in the over 100. And if we just use the old VVIX-VIX ratio, 113, 110 over 20 something, we're around 5-ish or left because the market is very hedged. Why does all that matter? Because we now have a situation where we have potential fuel for a rally, artificial fuel. Of course, those puts below us could also be magnets down if we get to them. But I'm seeing a big spike here. Let me just find whatever chart to be on. Is this the right chart? No, it's not the right chart. Where's the right chart? Where's the chart that I was on? Yeah, okay. We have, we're up to 60-20, the top of the chop zone already. I don't know if there was news, but that's where we are. Now let's take a quick look at the options positioning. Then we'll circle back to VIX and look at the VIX setup a little more closely. And then we'll kind of see where we are from there. If you have any questions, please put them in the chat. And let me know where you see today going. Do we finally
close above 60.50, local high, the Gex magnet. Now let's talk about why that's a Gex magnet now. Okay, and I think the darker view is probably easier to see. And this is options depth, uh, which is what I use for my SPX laser game plan. I use Mentor Q, I use other services, other tools for different things. I use Gamma Edge, I use everybody. But this is my go-to. All right, so let me change this to 0 DTE. I see what I was doing here is I was looking out in time. I wrote a note in the weekend looking into July, so I have all the July options here and the different positions. But now let's get to what have you done for me lately? How are we going to make money today? So I'm going to set so that we could see just below 5,900 and just above 6,100, give us kind of the broad range of what we're looking at. Okay, so just as a reminder to folks, what we're looking at right here is market maker net positioning. Market maker long gamma, quote unquote, where we stall, mean revert, sort of as support and resistance, kind of yeah, but kind of not. More mean reverting area. So let's just so what happens? As we go up to this area, market makers have to sell to hedge out the short, customer short, long gamma. But then as we move away, then they sold too much and they have to buy. And as we move down here, 6,000, we have market maker long gamma. As we head down, they have to buy. But then as we come up, they have to sell. So we get into this little drift zone, chop zone, and then we either stay in it or we break out. Why might we break out? We have these long calls over here. And of course, there's going to be trading intraday. There's going to be changes in volatility. They're going to affect the surface. There's going to be all these other things that are going on. And we have this big AZZ, as technical term, customer long, dealer short gamma, possible magnet up at 60.50. And we have another tranche at 60.60. So should we break free of the orbit of this stuff, 60, the 60, 25, 30, this top of the chop zone, lower zone, whatever. We have a path up here. 60.60 was that local high on the CPI. I think we opened there. And then we have customer sold calls up here, probably not getting up there. We have a little bit of stuff near 6,100, nothing really. To the downside, should 6,000 break? There's not a lot, there's some support right here where we closed on Friday. No coincidence. This was kind of what pulled us into this area for the close on Friday. And we have this chop area with this little hole here. So below 95, we kind of sink here, and then market maker hedging starts to buy. And we get into here, and there's more buying required for here as we pull back. So, we could easily, if some weakness comes up, just kind of stay in the 90, 95 area. But let's just say there's bad news, VIX pops, whatever it is, IV spikes. Below 75, there's really nothing here. As Paul Duncan from Gamma Edge used to say, don't torture the data. There's nothing here. And where do we go from here? Well, we have down goes Fraser early all the way to 2025. There's really nothing here. I put in 60/50 just because it's a round number. But in the 0 DTE gamma world, there's nothing here to support it. And so that's the setup we're walking into. Closer look here, we see magnet here, 60/50, the red. If we get up here, we can shoot to there. We see magnet down here at 58.90. What's that 58.90? That's this. That's this. So those are your two, I wouldn't call them extremes, but two possible, magnets. And then we have all this stuff below. And here's just a little more granular view of the positioning. Let's see, do I have a 0 DT? Okay. So here's puts. I purposely put to see what's going on at 60/50. So this is customer side. So customers are short some 60/50 puts. But they're also long the 60/50 calls. And we have 5,000. Now we've been seeing this feature like 5,000-ish calls, 7,000, 5,000 almost every day this last week. So somebody somewhere is gunning for it, or it's a hedge against the futures. I don't really know why it's there. I don't really care. It's none of my business. What is my business is to know it's there and to know how to trade it. So that's what we have going on here. Now let's take a look at VIX. So VIX as of right now, this is Gamma Edge. Invert. Okay, so first let's look at, so spot, hopefully you guys can see it. I'm not great at adjusting their toys. Okay, so you see spot is here at, closed at 20-ish. Where is VIX now? I don't know, let's take a look. And for that, we gotta go back to trading view. And let's see where VIX is. 19.65. So down from the 22 plus ish on that we hit on Friday at the max panic, war in the Middle East, which is something to worry about. Nuclear wars, maybe we need to take that seriously a little bit. Down, and we closed near, we closed, I don't remember where we closed on Friday, and now we're sub 20. Why is sub 20 important? I'll let you know. And for that, we got to go back to, and there's a lot of ways you can visualize it. Like I said, I like Gamma Egg stuff. They're my buddies. And so what do we got going on here? Look what we have going on here at 20. We have 1,000, we have whatever, 200,000 calls, 100,000 puts. Let's just pretend that they're all customer long calls, customer long puts. That gives us way more deltas in the call side. Market makers are short these calls. They have to hedge them as we go up, and we get attracted to what's above us. 21.5s were bought in size over the on Thursday or Friday. I forget when. It's in my notes. But then as we go below, then the hedging pushes us down. And so we had down at 17, which was kind of the recent low. We have all these 200,000 puts. So as we get down here, then as those puts go in the money, then market makers have to keep selling. So we have all this stuff going on in VIX that's going to have to be hedged out one way or another. That's going to spill into the SPX space. And this all unclenches on Tuesday, Wednesday, along with the FOMC. You might have heard of Jay Powell, along with the FOMC, along with the SPX AM, the last trading day. Let me just pull this up here just so you can see it. I don't really use this to analyze my SPX, but let's just do it just because it's SPX. So this is the AM only invert. So here's what's going on in the AM expiration. And we can just see, well, I just want to see, where's I have a number of contracts somewhere. Total OI, 6 million. 6 million with an M. Now, we know that that's not all OI that's going to be tradable. I'm not going to get into that. Versus the SPX PM. And which has about 4 million, but that's in the whole complex. If we just look at the AM, only 122,000. So that's why I just wanted to do that to illustrate why the AM is so important. That's where the institutions are. Questions, comments, put them in the chat, folks. Don't be shy. Okay, so we have that going on. We have the AM expiration coming offline, and that's a lot of stuff to hedge. We're going to go look at that again, and I'll probably do a write-up looking at that. Now I'm pulling up NDX. Why am I pulling up NDX? Who wants extra credit? Why am I pulling up NDX? Nobody? Why am I pulling up NDX? Let me see a comment over here. Next, anyone in the next 2 minutes that's not a subscriber wants a free month, put in why I pulled up NDX. If you get it right, you get a free month to Substack. Timer is going. I don't really have a timer. Okay, well, no one's taking me up on it. I pulled up NDX because we have the QYLD call. So we have 4,700-ish. We have 4,700-ish. Yes, we have, very good. We have the 4,700-ish in the money calls in the NDX that the QYLD fund will be buying back on Wednesday. Right before the FOMC. What could possibly go wrong? Easy to predict, right? And so that's whatever, 328,000 deltas, whatever it is. That's a lot of cheese. Now let's just pick this up. Let's see what delta those calls are. What strike did I say they were? Was anybody paying attention? Because I wasn't. Let me go back here. 21325. And every month when they come out, I tweet about it, I talk about it, I write about it. I've been doing it for quite a while now, years. So where are we? And we also have some of these calls, but I have no idea. This could be a different override fund. The OI looks suspicious. Now, if this is market makers short, then that becomes really interesting. I don't know, just in a little back of our heads, put 21,500, mark that in. So 21325, let's go find the delta. 21, we don't need volume, let's look at open interest, make it visually easy. Here they are, 21325, 73 delta. So this wasn't hedged out at a 73 delta on, what day was that? On Friday, because NDX was probably 1% lower. This was probably not even a 50 delta, or 50 delta if you're lucky. So now there's going to be buying back that has to be done to hedge this out, and maybe some of it was done, but either way, these deltas are going to be bought back. And whatever the difference is, let's just pretend there's still a 75 delta. That's still 25 deltas to buy to hedge this out on Wednesday, which will naturally have a supportive effect. Of course, on Friday, again, let's pretend that we're here at 21,600 on Friday. They're going to be selling, and we'll just find the 50, whatever. They'll be selling however many thousand, 5,000-ish of these calls for the next month on Friday, and that pushes us down. It just tends to. Okay, so that's another thing that's going on along with the geopolitical headwinds and everything else. So let's take a look real quick at the expected move for the week. So here's the expected move for the week. The top of the expected move is same as it was last week, 6090-ish, almost 6100. Call it 6100 for government work. You guys that follow me know I like to round. I like to use 5 pointers. I like to use ish. I'm not a 6092.67 kind of guy. I'm a 6100, 6090 kind of guy. And here I'm a 5083.69, so I'm a 5900 JP Morgan collar support bounce kind of guy. And yeah, maybe undercut and come back up. Probably not. So far for a few weeks now, you could sell below 5,900 every day and go to sleep if you're an iron conduit seller like me. And so that's the landscape into the rest of the week. Now let's see, any questions? Any comments? Okay, so, how'd you let me forget? We got the IC whale. The IC whale sold, and I believe he sold, and I got some mock whales working. He sold I think it was 25.20, and he sold, or maybe it was 20. I have to double check my notes, or you can check my notes. He sold the puts down here at 20 or 25, and he sold these calls. He got about one. I got it over here. No, this isn't right. This was my version. He got around $2 for this. So right now he's losing money. And so here you can see 3,000 contracts. I think he did smaller. And so if you don't know who the okay, that expected move indicator, I don't have that on TradingView. I think I have something I could dig up for you. That's something that is from TheoTrade. They had it in their free indicators. When did I used to hang out at TheoTrade? 2017, 18. And that's where I got that from. But DM me on Substack and I'll find a way to get you something like that. Cheat version, just look at the 20-ish delta calls and puts. And so that's why when we go back to the daily plan and to what's going on here, let me get back to this. Was this the one I had it on? There we go. No, it's a different one too. I don't even know which one which one is the one with my stuff on it. That's not the one with my stuff on it. There we go. Okay. Okay, see how it has Doc on it. That's how I know it's me. Okay. Oh, the reason I have it on that is because I was looking at VIX. Okay. Right at the stall area. Look at that. So that's where where we expected to stall, and that's where we stalled. And that's kind of where we are. Actually, I think that's not the right one. Doesn't really matter. I guess that is the right one. This should say, yeah, that was Thursday close. Okay. Thin zone on number, downside feature. Yeah, okay. That's where we are. Okay, and so that's basically what I'm expecting today. Any questions? Let me just make sure I have this right. What I'm going to do is inelegantly, let me stop screen share for a second. I'm just going to make sure I have the right trading view string in here, which I give to my subscribers. And you're worried about the trading view string. It's simply the levels that I write in my daily plan. Those are the levels that are just written out, and Trading View draws lines there for me. There's no math, quote unquote, in it. It's just horizontal lines and text descriptors. Here we go. Okay. Found it. Whoops, wrong one. Okay. And now let's look at, you guys know me, I'm going to look at an iron conduit setup. Okay. Yeah, this is good enough. This is good. This is the correct one. Top of the chop stall. And so, I mean, would it shock me if we broke 6,000 with all that's going on? Potential trades for today? Sure. Not investment advice, et cetera, disclaimer. I'm just going to think out loud. Would I buy a put credit spread? You mean, I'm guessing you mean sell? I'm guessing you're talking about selling a put credit spread. So I'm just going to talk out loud. I'm going to think out loud here. So what might I do for today? Now let's just forget this noise here, because I have some trades I modeled out over the weekend, which don't really make sense anymore. So I'm just going to cancel them. Okay. So first off, I like to be out of the danger zone. But somebody talked about, what was it? 70-60. That's not terrible. The thing with 70-60, however, and why I probably wouldn't do it, and again, this is my style. There's really nothing wrong with that. If we come down in here, yes, this should hold. Yes, this should hold. So it's reasonable. However, if there's breaks, things can get a little ugly down here. So my default would be, I like to be away from the round number and away from the action. So I like something like that, 15 wide for 60 cents. I'm going to put that in for myself. If it fills, it fills. If not, I'll mess around. I'll add. If it goes for 80 cents, I don't care. I'll add to them. And then the top side, well, we know we have that 50-50 magnet, right? We talked about that. So I want to be away from that. Let's take a look what's going on up here. We got these sold calls up here at 70, 75. If I can get up here, hide behind this, market maker long stall stuff, I like to hide over there. No juice up here. I'm willing to say we're not going to 65, 55 cents. I don't care to get equal credit. I don't care to get equal deltas. I just want to sell where I think it's safer. I might do 15 wide, I might do 20 wide, I might do a few of each. Now let's get back to this trade, because I'll tell you what I might do. Where is it? Let's get back to this trade. Now, what I actually was thinking about myself, I might be tempted to do some kind of asymmetrical fly kind of deal. Something like buy one of these, maybe give it a little more room, sell 1, 2, 3 of these, and then buy 1, 2 of these, not enough credit, move it up here. There you go. That's kind of juicy. That's kind of juicy. And use this as my unit of trade. Long is 70 put, short 3 65s, long 2 55s. Or you could just make it a regular broken wing butterfly, not asymmetrical. So broken wing is the distance between the wings aren't the same. Asymmetrical is the long and short contracts aren't 1, 2, 1. I actually kind of like this trade for fun. So I'm going to put in one for fun, and we'll see how that shakes out during the day. I did one on Friday, I think it was, something pretty similar. And it worked out fun with 60 being the long strike, I think. Actually, it started off at 70 leaving the long strike. And then it was profitable, so I rolled it down. So actually, the way I sometimes do these is I might do something like this to give myself room to sell this at a profit and then buy this back at the same price. I wouldn't do it exactly like this. I would wait till the open, but that's another thing that I might do. That answer your question? Lou? That kind of cover? But if you're looking kind of for a normal trade, quote unquote, 65, 55, and on top, maybe get away from that 50 round number. If you want to be a little more aggressive, something like this for $1.60, $1.65. It's not a third the width of the spread. It's kind of double that because we're 10 wide, but that looks reasonable. If we want to go 5 wide and do something like that for 90 cents, that's not bad either. So I'm going to look at something like that. And scalping, I'm going to look for setups that reflect what's going on here. I'm going to look for setups looking over here to try to get if then. If we are below and we come into this area, then I would expect supportive flows from here to pull us back up to here. You can get some like 5 or 10 point scalps in here. I see a 25 point scalp zone, but the edges are kind of, you're going to get flow. So it's really a 15 point scalp zone in here with this area as a magnet down if you want to buy a put, and a magnet up if you want to buy calls. Below 6,000, if I want to scalp, I'm going to scalp into 90, expecting the store where Lou wants to sell his puts, which nothing wrong with that. At some point, do we maybe get a run toward 50? Maybe. If we pull back, I'll look for a fly centering somewhere near 50 or 40 or something like that. And if we're up here, I'll look for a cheap fly somewhere around 6,000-ish, somewhere in here. 610, maybe. This is a good place for a fly. And let's go over here and look at charm and see where we might pin at the end of the day. And I'm not the best charmer, but one pin area is below this 2010 area, kind of where we are. Another pin area is right here, right around 6,000, somewhere in here. Another pin area is on top. So 60.35, remember we had that high, we closed above 60.30 last week. I forgot what day it was. It might have been Wednesday, Tuesday or Wednesday. That would be a spot that makes sense. This would be a spot that makes sense. What's the top of the straddle again? I had it in my notes. The top of the straddle right now, see, this isn't really updating. So let's just use the E-mini to get an idea of the expected move. The expected move is 26 from here. And so, and we know SPX right now is, where is it? Is 60.15, so 26, call it 25, whatever, is 40-ish. So that would be the top of the expected move. And that's it. Please like, retweet, whatever you do, reshare on YouTube. Let me put in my stuff. I'm not, my friends keep reminding me to do a better job putting in referral links and all that kind of stuff. Let me dig them up. Hold on. Where are we? Okay. So first things first, here's my Twitter. Here's my YouTube if you're on one or the other. Of course, if you want my full daily plan with the cheat card and the trading view levels and real-time chatting and all that kind of stuff, there's my Substack. If you want options depth, which I think is great, here's a discount code for options depth. Complete with the time that I saved it over there when I had somebody write it out for me. Here's a discount link for Mentor Q. And let me just put look at that chart at the end of the day. What Mentor Q has that I don't think anybody else has that I know of is futures. They have, aside from E-mini and NQ, they have, oil and gold and all that other stuff. Oh, I promised I didn't promise. I figured I would look at oil, but I'm running out of time. And so I'm just looking at Mentor Q real quick. And they have this roadmap feature, which is nice because you can just kind of easily visualize, especially for a seller or as a target. You turn on the roadmap feature and you can see the zones. And then with my plan, I know what to expect at those zones. And 6,000, here's that support if everything goes right, if all the assumptions are right, so that for my boy Lou, put spreads below here are certainly in that window. And they also have, like I said, they have futures, which I mess around with a little bit. I'm not a big futures guy. How do I do this? I need a different, oh, here's what it is. Here's the list of all the crap that I look at. Where's ES? So they also have the gamma levels on ES. So it makes it kind of easier to see. And it auto updates, so it makes your life easier. And they have gold. I don't have to tell anybody that gold's been flying like crazy. And there's resistance. I'm not familiar with gold levels. Like, I don't know the nuances. I know that oil out of the money call vol has been going through the roof. So I'm going to look to sell that stuff. And that's it. So where do you think we're going to close today? Put it in the chat. Where are we closing? On Twitter, on YouTube? Let's hear some predictions. Where's the pin? SPX, come on. We're at 60-16 now. Where are we closing? We're at 60-16 now. No takers? Oh, come on, guys. And as I was trying to show you guys, Mentor Q has 60-40. That wouldn't shock me. That would not shock me, that 35-40 area. So we got 2 votes for up here at 40. 2 people. Let me just to show. I don't think I was sharing my screen. So Mentor Q has the gamma levels for the futures. 60-35, and yeah, 60-35, 40. To me, that's close enough. So we're looking, so far, folks are saying in here, below 40, this is suppressive. So if this stays the same, in here somewhere is a very reasonable expectation. 5,900, oh my God. Ladies and gentlemen, get out the bear trap. When we're talking today, my buddy David thinks 6,000, which is an excellent default. When in doubt, we seem to keep gravitating to that number. And if we look at the charm profile, we got this zone right over here, 5905, right in here. Could easily end up here, could easily end up here. I'm thinking more like I'm thinking closer to what David is saying. I'm thinking the IC whale doesn't get skewered. Or end of week, that's another story. And end of week, well, there's a lot of football to be played between now and then. So IC whale, and then I'll jump off. I like to talk, so I could do this all day. So the IC whale is a retail-ish guy that also has a small hedge fund, like 50 million, whatever, and has a bunch of subscribers. He has a service. He's on Twitter. He's not kind of a secret who he is. He has videos, whatever. And what his strategy is he sells on an outside day, a day that the SPX exceeds the expected move. We know what the expected move every day is. It's not a big secret. On the next day, he sells about a 20 delta 5-wide call credit spread and put credit spread, getting between 1/3 and 1/2-ish the width of the spread. So on a 5-wide, he'll get between 165 to 185. Sometimes he gets aggressive and gets $2, $2.10. But what he does is he leaves it. Lately, he might have been playing with it a little bit, but basically he leaves it. And if it goes ITM, too bad, so sad, he does another one the next day and doubles the size. A martingale strategy until he wins or goes broke. So far, he hasn't gone broke. He's gotten up to 65,000 contracts and 92 cents away on the close of the SPX from losing whatever it was, 65 million, whatever the amount notional there was. And he hasn't. He's since sized down. And actually, I see, well, he's there today. I'm always happy to see him because I have clear boundaries. And it's only because of the IC whale being there that I'm not as willing to bet on the 35-40. What sometimes happens when he's on board, let me get back over here. Let's do this one, this version. Let me get rid of this. I can see my lines. What sometimes happens when he's on board is we go through his short strike, long strike, his long market maker short gamma. And it might look like we're going to 40, whatever. And okay, the whale is going to get harpooned. And then the market maker short gamma ends up pulling it back, and it ends up right below his short strike, and he ends up escaping. So right below his short strike would be another place where we might end up. And once again, just to remind ourselves what that short strike is. This is market maker. So we're looking to have the right day here, 0 DTE. Yes, I do. So here it is, 60/20. So 60/25 is what he sold. Somebody else sold 60/20s, not as many. And the puts, he sold the 25s or the 20s. I forget which. I might be off by 5. I'd have to look. But either way, we know where they are. All right, guys. Now I'm going to go to listen to vol signals, morning call. I take his mentorship program and his VIP program, whatever it is, former market maker, et cetera. And I'm going to get him on to talk to us. I'm going to get the options that people on to talk to us. Paul Duncan from Gamma Edge agreed to come on to talk to us. Scott Nations from Nations Index agreed to come on to talk to us. I'm sure I could twist Ivan's arm and get him to come on and talk to us. Ivy Trader, who recently just has some kind of arrangement with Trade with Insight TWI, who I just post some stuff there. They're great traders. They do a lot of like short-term scalps, like 1, 2, 3 hour scalps in individual stocks. SPX too, but that's not necessarily what they focus on. They just focus on the movers, using TA and ATR and whatever they use. Usually it'll be like a one strike out of the money Tesla call for Friday kind of stuff that they trade. And those guys make money. They make money, and Ivan is on TWI now. So Trade with Insight. So all good stuff, all lots of ways to make money. This is not a zero-sum game. It's a win-win game. And so I hope we all win. See you all. And I'll be back with Binkus at noon to share my Binkus levels. And let me just show you guys the cheat card. How do I make that the whole screen share? I'm not sure. There we go, kind of, sort of. And my subscribers get this cheat card that my buddy Nanda does for me. Here's the chop zone. This is based on the morning open. Here's the stall sticky zone. Here's little reminders of what you need to keep in mind. And that way, when the heat of battle, you can glance at the cheat card. Okay, that's it. Next time I'm really gone. Gossing's calls are already started. I'm out of here, guys. Yeah, it starts at 9. I missed the beginning. Okay. Usually he goes over the day before. So I missed the day before. I'm going to try to get there in time for today. All right, guys. Take care.